Hello and welcome to the 2021 quarter 3 review. There's been quite a few things that have happened over the last month especially, so we're going to look through those things and also look at what that means for us going forward. So first thing to note is that September wasn't a great month for equities across the board. We were down in almost every major geographical location. So in Canada, we was down 2.5%, in the US, 4.5%, in international markets, about 2.7%, and emerging markets around 3.7%. That doesn't mean that we're still not positive on the year. In Canada, we're still up 17%, in the US about 14%, international about 7%, and emerging markets, because of what's happened over the last few months, which we'll get into, we're still down about 2%. But a lot of things have been on investors' minds, so we're going to take a quick look at what has caused this volatility in September. Bear in mind that it's not unusual in September and October to be the most volatile parts of the year, nor is it unusual for markets to drop, 10% in any given year. It's very common, it's very normal, and we invest in a way that plans for these type of things. In fact, I see this pullback as more of a good thing for markets instead of the crazy bull run that we've had over the last year and a half. So let's look at some of these things that might be weighing on investors' minds. So first of all, we have a slowing down of economic growth. That's to be expected. We've seen some big, especially tech companies, quadruple almost during the pandemic, and now we're kind of seeing the end of that. A lot of these earnings have to be put into check, and a lot of this growth is going to start slowing down. It doesn't mean that there will be no growth, but it might not be as exponential as we've seen over the last little while. Another thing that is on investors' minds is going to be inflationary pressures. There's a lot of inflationary pressures. You've seen it in the news. We've spoken about it before. It looks like it's going to be around 5% this year. Good news though is it does look like 2022, 2023 that will be able to be tapered back. So it's not something that really should be a huge worry, does it? But it doesn't bode well for fixed income investors and people that have a very low risk tolerance, especially over the little while. In the bond markets, yields are very low, so that means that it won't keep up with inflation, especially in the short term. Another thing that was all over the news, we had the US debt ceiling. I'm not sure why they still have a debt ceiling. They seem to enjoy printing money, but it was in the news. It kind of got handled, but the repercussions for a country like the US, the biggest economy in the world, defaulting on debt and bonds would be it'd be huge. The fallout from that. So really, the question is how do they kind of keep that debt under control? It seems to be we're now at the point where it looks unlikely they would ever run a surplus and get out of debt. But how do they maintain that and make sure that they still remain liquid? This isn't a 1 year problem. This is a 20, 30, 40 year problem as things just become more expensive to do, as running a country just becomes more expensive, especially with the amount. Look at the infrastructure bill. These are trillions with a T of dollars that are being used to fund the expansion of the US as a whole. And that effect trickles down into Canada as well. We're very closely tied to the US economy. So if something like that was to happen in the US, you can be sure that it would put a lot of pressure on the Canadian economy as well. Something that's a little bit more short-term focused is the Fed. Powell came out and basically said that a lot of tapering. Currently, the government is in a bond buying program, so they're supporting the markets a lot, the public markets, and that looks like that's going to be tapered back come November. And this is where we really see how much legs the market has to stand on when that support and that safety net slowly gets brought back. And I don't think they're going to be pulling any rugs anytime soon. But if it does get brought back, where do we stand after that? And it's also interesting to know is that yields are coming up, and it's expected that they're going to keep coming up to some type of normalized state. It doesn't mean we're going to be seeing 3% jumps in interest rates. That would completely cripple most of Western society. But it is important to note that these like we look around and you see the housing market has been on fire. People basically taking out as much debt as they can. When these 5-year terms on their mortgages roll around, and instead of paying 2% interest, they're now paying 3% interest or 2.5% in 5-6 years, how will that impact the economy then? And that's where inflation may be a saving grace here, is that if inflation does stay around that 3% mark, that might be just enough to provide a cushioning for them interest rate rises. And then we have one of the major contributors to this sell-off, and that's been China. So when we look at what's happening there with the regulatory pressures that large tech is coming under, and then we look at the Evergrande default, things like that, they have a very wide-reaching effect. Whether they should or shouldn't is up for debate. So for example, when we look at the Evergrande, they are a large real estate developer in China that looks like it's going to go bust, and they're going to default on billions of dollars worth of bonds. A lot of these bonds aren't held by North American investors, not even European investors. A lot of these bonds and a lot of this debt is held by people and governments and stuff within China. So it's really a case of how far will this reach? And that when this news of fish originally came out, we saw a big pullback. A lot of people got scared that it could be something like the Lehman Brothers in 2008, but it doesn't look like it's going to be anything close to that big. It looks like it will be secluded to that part of the global economy. Anyway, that's been everything of note for the past few months. If you do have any questions or concerns, please, as always, feel free to reach out to me, and I'll see you later.